Welcome, everyone. It's so great to see such a large and diverse crowd coming together to focus on cybersecurity for the financial services sector. I'm Monica Lindeen. I currently serve as president of the National Association of Insurance Commissioners, which is the U.S. standard-setting and regulatory support organization created and governed by state insurance commissioners. My day job is to serve as the Commissioner of Securities and Insurance for the state of Montana. And I'm very pleased to be here today participating in the Center for Strategic and International Studies program on managing cyber risk and the role of insurance. First, let me thank you all for taking time out of your schedules to join us today. I especially want to thank our two keynote speakers, who I think will really tie together the two areas of financial services and security for us. Deputy Secretary of the Treasury Department, Sarah Raskin, will be sharing her thoughts with us in a keynote address. And then later, we'll hear from Suzanne Spalding, Undersecretary of the National Protection and Programs Directorate of the Department of Homeland Security. I also want to thank the moderators and panelists for our two panels. The first panel will cover the threat landscape. We'll hear from our four experts about some of the threats we are collectively facing. Our reliance on data and connectivity have opened up great opportunities for us, as we all know. But at the same time, this leaves us vulnerable to attacks from people who want to steal our identities and our intellectual property. The second panel will cover cyber risk management in the financial services sector. As an insurance regulator, I must work with and oversee an industry which can be both victim of a cyber attack and at the same time a risk management solution provider for other parts of our economy. The second panel will explore this dual role and provide you with the latest information on managing cyber risks. And then following these two fantastic panelists and keynote speakers, our Senator Ben Nelson, CEO of the NAIC, will provide closing remarks capturing the important highlights from this event. And so with that, I want to thank you all again for attending, and I can't wait to get started.
Good morning, and thanks for coming to CSIS. Actually, cyber security insurance was the very first event I ever had at CSIS more than a decade ago. And I can tell you when we had that event, we had a much smaller crowd. But I attribute that in part to the excellence of our speakers and also to the fact that we now have a little more experience in thinking about this. We're very happy to begin today with Deputy Secretary Sarah Bloom Raskin from the Treasury. She was confirmed as the Deputy Secretary in March 2014. She works on a range of issues, including, I think, leading the department's cybersecurity effort, which is one of the most important, if not the most important, in the country for the financial sector. Prior to that, that's just one of the issues she works on. I was kidding her on the way up that she does have a day job. So she will give remarks and then have time for just a few questions. We have to expect that. Prior to that, she was a governor of the Federal Reserve Board, which was probably more fun, certainly maybe less stressful, and worked on the Open Markets Committee, which, as you all know, is very important for monetary policy, and so had oversight of the payment systems, which is crucial, I think, for understanding cybersecurity. On cybersecurity, she has been a leader in promoting cooperation between the financial sector, the public sector, particularly on information sharing. She's led the efforts to coordinate federal and state regulators, which is one of the reasons we're happy to do this today. And she's looked at cybersecurity policy across the financial sector. Part of her trips around the country have been devoted to cybersecurity, and we're exceptionally pleased to have her here today to speak. So with that, may I ask you to come up?
Well, thank you, Jim. Good morning, all of you. Thank you, in particular, to the Center for Strategic and International Studies for joining with the National Association of Insurance Commissioners to bring us today's event. 4 centuries ago, political philosophers developed a social contract theory to defend the legitimacy of government and explain its relationship to society and the people. These philosophers, people like Thomas Hobbes, John Locke, and Jean-Jacques Rousseau, all put a different spin on it, but the basic idea was that people traded their natural rights of vigilante self-defense and self-help for the protections offered by government with law enforcement and systems of civil and criminal justice. The theory was that all of our rights and property are safer if we consent to government than if we simply go it alone and remain in a state of nature, the place that Hobbes famously called nasty, brutish, and short, and which too often comes to resemble a state of war. In many parts of the world today, Syria comes quickly to mind, people are still struggling for the basic security and safety provided by civil government. The state of nature, as we see simply by opening up the morning newspaper, is still a state of war, chaos, theft, misery, and flight. The world is also struggling to establish cyber protections, because today, at least in the functioning civil societies, commerce, banking, culture, entertainment, insurance, payment systems, and government agencies are all online and interdependent. We've seen how vulnerable all of our major and economic and social sectors and institutions are to hacking and cyber sabotage. The examples are well known: Sony Pictures, JP Morgan Chase, Target, Anthem, the Office of Personnel Management. We know that cyber terrorists would like to find a way to bring down all and anything that uses the internet as an act of war against the network of civil societies that have created a new interconnected global community. In the internet age, which is now beset with hacking, cyber assaults, cyber sabotage, and cyber warfare, an updated social contract is needed. What is the responsibility of government to protect us from cyber enemies? What is the rightful expectation of private institutions like insurance companies, banks, businesses, and other organizations to protect themselves and to insure themselves against cyber risk? How can private institutions best work with government to create strong cyber defenses? How do we defend the competing values of cybersecurity and internet freedom? And while the new social contract is struggling to be born, what concretely should businesses, banks, insurance companies, and government officials be doing to protect all of us in the short term? These are not questions that we can answer completely today, but the people assembled here are some of the best prepared to engage in this dialogue. The participants here today come with some of the best insights from the public sector and the private sector. For the past 50 years, CSIS has been at the forefront in exploring the most vexing national security and foreign policy challenges facing our country and the world. For its part, NAIC and its predecessors have served for almost 150 years as a forum for domestic insurance supervisors to set model standards and participate in insurance regulation and supervision nationally, and more recently, internationally. Bringing both CSIS and NAIC together presents us with the opportunity to delve into the theme of one of our world's next great projects, namely the development of the arrangements among our society's participants in an interconnected world, and the development in the short term of creating strong cyber defenses for our people. The missions of CSIS and NAIC create a natural nexus and opportunity because cyber risk affects both our national security and foreign policy interests, and also the United States' economic health and financial stability. Your two organizations together are well equipped to help develop a common understanding of the cyber risks facing America and how best to identify and mitigate those risks. So, let's take a look at the risks. The internet and the devices we use to access it provide us with unprecedented linkage to one another and to the world. By some estimates, this year, 25 billion devices will be connected to the internet, translating into more than 3 devices for each person on the planet. And 5 years from now, in 2020, internet-connected devices are expected to double to 50 billion. Now, as a mother of 3 young adults and teenagers, I'm convinced that most of these devices are in my household. But in addition to personal computers and smartphones, today the internet is connected to everything, from our cars, parking meters, door locks, thermostats, to cardiac monitors, other medical devices, and even cows. Yes, cows, so that farmers can monitor the location and health of their livestock remotely and in real time. What will tomorrow's connected devices include? We likely can't even begin to imagine them all today. The point is that our economic activity is increasingly propelled through these devices, devices that present paths to the internet's intricate web of connections, but whose security has largely been an afterthought until recently. The internet is where the American people communicate and engage in commerce. It's also where a vast amount of personal data is stored and shared. The internet is also where critical infrastructure organizations, energy, financial services, transportation, telecommunications, healthcare, and governments do business. We are so interconnected that the risk of contagion within and across our critical infrastructure creates potential national security and foreign policy concerns. It also creates concerns around our domestic economic health and financial stability. Not so long ago, cyber threats were largely tied to economic crimes and acts of vandalism by hackers or hacktivists with political or social agendas. But digital threats have now transcended economic and attention-seeking motives. As you know, late last year, North Korea launched a destructive attack against Sony Pictures, destroying systems and wiping out data, along with the more sensational public posting of unreleased movies and confidential emails. An insidious geopolitical purpose was afoot: to damage, shame, and ultimately attempt to coerce a U.S. company and its personnel from exercising their right to free expression. Less noticed, but also disturbing, was a cyber attack on a German steel mill last year. The attack began with so-called spear phishing. Hackers sent targeted emails from seemingly trusted sources to trick plant personnel into opening attachments or visiting websites from which tainted software or malware was downloaded. That malware allowed hackers to steal computer login credentials from people who worked at the plant. Remotely working their way from the office into the production computer networks, hackers ultimately gained access to systems controlling the mill's manufacturing equipment. Once the hackers got themselves inside the mill, possibly from the comfort of their living room sofas, they took control of the plant's systems. The plant's managers needed to shut down the blast furnace, but found that they could not. They no longer controlled the on-off switch, which had been appropriated and taken over by the hackers. In short, the plant was unable to control the shutdown of its own furnace. And to think, it all began with an email. This certainly is a wake-up call. Some of our nation's most prominent health insurers, Anthem, Premera, and Care First, were also targets of attacks this year. The attackers stole names, birth dates, and street and email addresses, and also, in some cases, took medical identification and Social Security numbers. In government, we are also not immune to the threat. This spring, we all know that the Office of Personnel Management announced a series of cybersecurity incidents and vulnerabilities that exposed sensitive personnel records and security clearance files of 21.5 million current and former federal employees and contractors. The stolen records included detailed biographical information spanning from where people lived, worked, and were educated, to their relatives, friends, neighbors, and business associates, as well as sensitive health, criminal, and financial information. The health insurance and OPM breaches are particularly alarming given the high black market value placed on private health data as a tool for extortion, fraud, and identity theft. Personal information can also provide adversaries of the United States with information to target individuals for espionage or physical harm. Indeed, in private companies and public institutions, and certainly across this administration and the Department of the Treasury, cyber threats are recognized for what they are: one of the most pressing operational, financial stability, and national security risks of our time. So, how do we respond? Given the growing frequency, sophistication, and morphing ability of cyber attacks, we, all levels of government, our critical infrastructure, our financial firms that contribute to our economic stability, including insurance, and frankly, all of us as individuals have to take responsibility for protecting our nation, our individual and collective assets, and each other from cyber threats. As I see it, it's a collective responsibility. It's what I called it earlier, the updating of a social contract for the internet age. So first, let's talk about what governments can do. Governments can and do play an important role. In cyberspace, governments have unique capabilities that can be brought to bear to identify and counter threats, as well as mitigate harm. A key responsibility for Treasury is helping to safeguard the resiliency of our economy and the financial sector, one part of which relates to cybersecurity and resiliency. We work closely with the Department of Homeland Security, financial regulators, including the NAIC, and the law enforcement and intelligence communities. Our efforts include helping the financial sector increase baseline protections, like encouraging basic cyber defensiveness for financial institutions, and facilitating the sharing of cyber threat, vulnerability, and incident information. We also help private institutions and other government agencies practice responding and recovering from simulated cyber attacks through a series of tabletop exercises. Treasury also works to deter illicit cyber activities and the individuals behind them, both domestically and internationally. When traditional law enforcement and diplomatic engagement prove inadequate and the exploits are significant and malicious, we can now impose targeted financial sanctions on individuals or entities overseas. These sanctions are not intended for garden variety malicious cyber activities. Instead, when cyber-enabled activities pose a threat to our national security, foreign policy, or economic health or financial stability, we now have the means to freeze assets, block transactions, and financially isolate the actors responsible for the most serious cyber threats facing our economy and country. In the current interconnected global environment, there's a growing consensus around the need to ensure that international legal principles pertain to state and non-state actors online, just as they do offline. To improve cybersecurity around the world, we are working with the international community to develop common understandings of appropriate behavior in cyberspace. Next, beyond government, what about the insurance sector? The insurance sector plays a role in helping to quantify cyber risk. For example, Lloyd's and the University of Cambridge's Center for Risk Studies recently published a study on the financial impact of a hypothetical cyber attack on a U.S. power grid. Characterized as improbable but technologically possible, and eerily similar to the German mill attack that I described earlier, the study highlights the potential systemic nature of cyber threats. Using the internet for initial access and later command and control, the scenario shows the potential cascading effect that a major attack could have, triggering monumental economic losses in addition to losses from the direct damage to electricity plants and equipment. Economic costs include loss of revenue to affected plants and companies that distribute electricity. Costs also include losses to commerce, productivity, commerce, trade, and consumption. Insurance companies know how to rigorously assess these kinds of losses. The insurance sector knows how to gauge the individual and collective risks and associated costs posed by cyber incidents. Of course, insurers do more than just quantify risk. Those that offer cyber risk insurance provide an important monetary last line of defense to their policyholders. Cyber insurance provides an important risk mitigation tool by allowing policyholders to transfer some financial exposure associated with cyber events. Cyber insurance can play another role as well. The underwriting process itself can bolster cybersecurity. To qualify for cyber insurance, a business typically fills out an application seeking details on its risk levels and controls that it has to mitigate the risk. The act of engaging in this process helps businesses identify tools and best practices that they might lack. Some insurers go a step further by asking questions during the underwriting process to better gauge how embedded cybersecurity is in a company's governance, control, and enterprise risk management infrastructure. These insurers ask their customers, is cybersecurity part of the company's risk management framework? Are third-party service providers evaluated to ensure their adherence to the company's cyber requirements? Does the company have a cyber incident response plan or a documented playbook to guide response from a significant cyber event? Does the company engage in basic cyber hygiene necessary for good defensiveness, such as regular patching of software and scanning for malicious activity, and mandating multi-step identity checks, what we call multi-factor authentication, to access company networks? Just by asking these types of questions and making them part of the underwriting process, insurers can move the needle. When organizations embed cybersecurity into their core governance, control, and enterprise risk management infrastructures, in other words, when the cybersecurity is tailored to and part and parcel of systems, operations, and processes, multiple lines of defense are created. When this happens, it's a game changer. Why? Instead of grafting cybersecurity controls on top of existing controls, hoping they'll stick, cybersecurity becomes part of an organization's DNA. When done right, collective defenses, a combination of people, processes, and the right technology, cannot be circumvented, cannot be removed, cannot be defeated. Just as the insurance industry can assist businesses in mitigating their cyber risks, The industry can help us all by leading by example in managing its own cyber risk. Whether a large insurer operating in all 50 states and internationally, or a small mutual insurance company with a limited scope of business and geographic reach, insurers collect and store highly sensitive policyholder information. This data is a key asset which, if exposed, as we all know, may violate privacy laws or certainly privacy expectations and may lead to substantial consumer and reputational harm. Encrypting sensitive data throughout its life cycle, both in transit and at rest, is one key control. Insurance companies can't stop at their own cybersecurity controls either. They also have to make sure that their third-party vendors have cybersecurity that is up to par. Insurance data is not just used by the insurers, but by a whole range of others that assist with actuarial, underwriting, and claims adjusting processes. So I've spoken about the roles of Treasury and the federal government and the insurance industry. I'd like to close by briefly touching on the essential role of another part of government, which are our state insurance regulators. In many ways, state insurance regulators, many of whom are here today, are the cops on the beat when it comes to cybersecurity at insurance companies and the protection of sensitive information of applicants and policyholders. But state regulators need not go it alone. I commend NAIC for recently appointing a task force to centralize insurance regulatory activities around cybersecurity. This past spring, that task force adopted 12 principles for insurers and other regulated entities to join forces in identifying risks and adopting practical solutions to protect information entrusted to them. NAIC has also developed guiding principles for insurers underwriting cyber risk and is developing a set of best practices for examiners to test insurers' processes and protocols around data security and protection. Along with other state and federal financial regulators, NAIC is also a member of the Financial and Banking Information Infrastructure Committee, and cybersecurity is at the top of this group's agenda. Last summer, I launched regular principal-level meetings of this committee. And at these meetings, we focus on strategic issues around cybersecurity. Topics range from removing information sharing impediments and enhancing incident response planning. We look at examining financial firms to identify best practices around cybersecurity controls. Adam Ham, the insurance commissioner for the state of North Dakota and a speaker on today's second panel, has been an active and thoughtful participant in this process. International engagement is also essential. Treasury, through our federal insurance officer, and NAIC need to continue their collective work with the International Association of Insurance Supervisors, which is a key international standard-setting body for insurance. In the coming months, IAIS will be assessing whether to revise global standards and guidelines for insurance supervision to better address cybersecurity and related technology issues. This is all but a start. Cyber risk goes to the core of our nation's security, and really to the core of our everyday lives. As our world becomes smaller and the devices that connect us increase, so too does our responsibility to one another increase. We have glimpsed the dire consequences of successful hacks and cyber assaults against our country's assets and values. Addressing these cyber risks is unprecedented and daunting, but I'm convinced that we can collectively rise to the challenge. We are the Hobbeses, Locks, and Rousseaus of our time, collectively updating our social contract to meet the evolving demands of our day. Through the collective action of our governments, our industries, and the ingenuity of our people, we can give birth to a social contract that addresses the cybersecurity challenges facing us today. Together, our insights and experience will mold the contours of a more secure and resilient world, and I look forward to working with all of you in this endeavor. Thank you. I don't know, what time is it?
Okay, someone gets to be the lucky winner. Time for one question. I guess you're it, the person in pink. Go ahead.
Thank you very much, Secretary Raskin. My name is Bingru Wang with Hong Kong Phoenix TV. When you're talking about sanctions, could you please shed some light on what this administration is thinking about the possible sanction on China's activity in cyber? And does President Xi Jinping's upcoming visit is taken into a consideration when you are thinking or preparing this sanction on China? Thank you.
Sure. Well, thank you for your question and, of course, your interest. And I don't have any information for you to announce right now on EO designations. I think you do know that the United States does have sharp disagreements with China over its actions in cyberspace, and we are clear, consistent, and candid in addressing these agreements and disagreements with the Chinese. So, thank you.
If you can remain seated, we'll do a quick switch and then move to our first panel.
Good morning, everyone. I am Denise Zheng. I'm a senior fellow here at CSIS and deputy director of the Strategic Technologies Program. Just wanted to say thanks and welcome again for being here with us, and I'm glad we were able to get at least one question in with the Deputy Secretary. This panel is on the threat landscape. So obviously the focus of this event is on cyber risk management and the role of insurance. But in order to talk about insurance and managing risk, we really need to discuss the cyber threat and the vulnerabilities and the consequences or the cost of incidents. This panel will focus on that topic, including touching on some practices and strategies for mitigating cyber risk. So we have an excellent group of experts, luminaries in the field of computer security on this panel. They have a vast amount of experience in government and industry and technology and development, so I'm very pleased that they could join us today. We're going to let each panelist give some remarks, and then I will ask a few questions and then kick it off to Q&A with the audience. So first is Dmitri Alperovitch. I actually think I met Dmitri the first time in a skiff on Capitol Hill, talking about Shady Rat, and I don't mean the animal rat, but as in remote access tools. Dmitri is co-founder and the chief technology officer of CrowdStrike. Some of you may have heard of this computer security firm. He is a renowned security researcher and an entrepreneur. He previously was vice president of threat research at McAfee. And you may be familiar with some of his work leading investigations on Operation Aurora, which was the Chinese intrusions into Google and a number of other companies. Night Dragon, which was an espionage operation against oil and gas companies in the United States, and among other investigations. So with that, I will hand it over to Dmitri.
Thank you very much, Denise. Thank you for having me here at CSIS. It's my pleasure to be here and share some of my thoughts on this topic. You know, Denise, when we met talking about ShadyRat coming up on 5 years ago now, in that report I had actually coined a phrase that there are only two types of companies, those that know that they've been hacked and those that don't yet know. At the time it was a very controversial statement. Now it's been often repeated by many others and has become an accepted wisdom. But I would add one more phrase to that original statement, which is to say that if you're not being hacked, you should worry even more because you have nothing worth valuable to steal, so no one is absolutely interested in your data. And the reality is today that we're seeing a variety of different threat actors that are coming after organizations. We categorize them into three groups. One is nation states, and we have a growing number of nation states that are engaged in cyber espionage activities, as well as, on occasion, although still fairly rare, destructive attacks against corporations, as we have seen with attacks on oil and gas companies in the Middle East, obviously an attack on Sony last year from North Korea, and a few others. But from a nation-state perspective, it's interesting, you know, half a decade ago, we were only worried about maybe a few nation-states like China and Russia that were engaged in this type of activity. Now that capability has proliferated dramatically, and virtually every major nation-state is engaged in this type of activity, has aggressive cyber weapons development programs, cyber espionage capabilities, cyber warfare capabilities integrated into their militaries. And the norms that we're unfortunately seeing established is that that type of activity is tolerated and has become an accepted practice. In addition to nation states, of course, we have criminal groups that have been engaged in this field for decades for primarily financial purpose. While criminals, cyber criminals, operate out of almost every country, the hotspots of activity are undoubtedly former Soviet Union republics and states, some countries in Eastern Europe, as well as Latin America and Western Africa, where we see the majority of this activity, but by no means the only places. And then hacktivists and terrorist groups have increasingly co-opted the internet for their own purposes, using it for propaganda, using it for disinformation. And one of the things that we're seeing as an unfortunate rise in activities is not just breaches that result in theft of data, but actual publication of that data publicly, a term known as doxing in the industry. And I've actually made the argument that when you look at the Sony attack, certainly the destruction that took place in terms of the thousands of machines that were wiped out by the malware was impactful to Sony and took them down for a number of weeks, causing them to resort to running business on pen and paper and issuing checks to their employees and so forth. But the lasting impact will probably be from the release of all the confidential documents, business information, salaries, that will have repercussions on the business for years to come. Now all of their competitors know how much they're paying Angelina Jolie and Charlize Theron, and including those actors themselves, and how that compares to perhaps some of their male leads in movies, and has already resulted in millions of dollars that they have to pay to get parity on salaries. Just one example of how that business may change. And even if you look at the United States itself, certainly revelations from Snowden and WikiLeaks in the past have resulted in significant impact to the national security of the United States. And I'm afraid that that type of public release of information is a trend that will only continue in the future and will be very, very damaging to corporations. Certainly we worry about theft of data that can be used for competitive purposes, theft of trade secrets, theft of intellectual property for use by one particular entity, but having that information out publicly, and particularly embarrassing information, can truly be devastating to companies. And in fact, we have seen some companies that have had to shut down their operations because of the negative impact of the release of their confidential emails. And I'm sure everyone in this room would not want every single email they have written, every single instant message they have sent to be out there available for the world. And unfortunately, that's a world that we're coming to. One of the other trends we're seeing from a nation-state perspective is really the aggregation of the personal identifiable information. So some of the recent breaches we have seen at the insurance companies, at the healthcare companies, at organizations like OPM, when taken in aggregate, really show that in those particular cases, the Chinese are really building what I call the Facebook of PII, of personally identifiable information, where they can have information, financial information, healthcare information on nearly every American citizen, and certainly on citizens that work for the U.S. government and have clearances, much more deeper information on their backgrounds, their families, perhaps even their sexual proclivities and other things that may come out in these investigations. So access to that type of information from a nation-state perspective, intelligence agency perspective, could be hugely beneficial to blackmail people, to recruit them for conducting espionage against the United States, and that's a worrisome trend as well. So let me end there and have some of my panelists share their perspective on this issue.
It's good to know. I actually didn't know that you were the one who coined the term that, you know, there are two types of companies, those that have been hacked and those that don't yet know it, but now I know to attribute it to you, so
yeah, I've actually personally suffered IP theft by others taking over that phrase.
Next up is Stephen Shirley, who is the Executive Director of the Department of Defense Cybercrime Center, also known as DC3. I actually think the first time I met Stephen was when DoD was starting to stand up their defense industrial base cyber threat information sharing program, and at the time it was, you know, it was a very new pilot concept, and today it's, you know, it's really served as a model for almost every other sector. So Stephen also at DC3, he leads the computer forensics for DoD and cyber investigations training for the department. And of course, he runs the info sharing program there. So with that, I wanted to hand it over to Steve.
Is this on? Yeah, great. Thanks, Denise, and CSIS and NAIC. As Denise alluded, for the past 7 years, DC3 has partnered with defense companies to provide them with actionable threat products. And then we analyze their reporting under this voluntary program. That's an interesting set of things in motion. When you consider the corporate logos of the principal companies who are members in this and their corporate subsidiaries, it's about 300 companies altogether today. Those companies range from a dozen or so employees to companies that have thousands of employees and with a corresponding network complexity. As I mentioned, we receive the reports that companies voluntarily make according to an agreed tiering schema, and we analyze those, and then we share the analysis and observations of those reports across the partnership while we anonymize the identity of the reporting company. Within the trust circle that this has nurtured, this has enabled very rich sharing between and among the partner companies and DC3 and the Department of Defense. And what this has really done is driven an iterative, highly iterative learning cycle. And that probably becomes one of the most powerful benefits of belonging to this partnership. Beyond a line of business as the clearinghouse for the partnership, we have a pretty capable intrusion forensics and malware analysis laboratory, and we sort of perform as a bat shop for the Department of Defense, law enforcement, and counterintelligence organizations and some of our federal mission partners. So we have knowledge and get to see intrusions that occur outside of the partnership and may occur across government and in other business sectors. So some observations from that 7 or so years of practice that may be useful for you. I would tell you, if you and you've intuited this probably from the remarks, or perhaps you wouldn't be here, but all companies in all sectors operate in an aggressively predatory network environment. The threats are omnivorous. They're from as Dmitri emphasized, they're from multiple actor sets, from criminal enterprises. And so I would leave one bumper sticker, and maybe we should, we could, copyright it here. If you can touch the internet can touch you. That's your business, that's you at home, that's in every device that you use, your mobile device hanging in your pocket. So if you're in business today, this should be considered a key concern in your enterprise risk management for every company. From the standpoint of protecting the company key intellectual property, to protecting your account holder data, client data if you're a law firm, for example, patient data if you're in the medical insurance or services industry. But also, as Secretary Raskin mentioned earlier, from the standpoint of protecting your company reputational equity. So, for numerous reasons that you've already heard and we'll hear more about, this should be a deep and immediate concern for you if you're in business. That said, I don't think the cyber apocalypse is necessarily nigh. But it does mean that attentive and fundamental network hygiene and security make a positive difference. Not a perfect difference, a positive difference. Beyond attention to fundamentals, some of the actions taken by our industry partners that I referred to, and I would tell you that I think because of this partnership, they perhaps understand the threats arguably better than perhaps some other businesses. They've undertaken a range of network security initiatives that vary really by their means and their network complexity. These additional initiatives can make a bigger difference beyond the fundamentals of network security, like patching your network, changing the appliances on your network from the factory default settings, password discipline, and so forth. And again, the things I'm going to talk about vary by the companies and their means. On one end of the spectrum, the actions include simply reducing internet connectivity. We're partnered with companies that have decided they're just going to turn off the internet during X period of time, during non-business hours. Other companies have decided to disconnect major business units or functions in the companies from the internet entirely. I mean, from the standpoint of, do you need internet connectivity on the manufacturing floor, for example? Or blocking IP addresses based on preset filters. Or continuous monitoring and response to anomalies that a network security staff would notice. Well, a basic thing would be, should we buy and maintain a network security staff? Several partners have created standalone enclaves for certain categories of information, where they've decided they're simply gonna move categories of information that are key to them or their clients, and virtually either eliminate entirely internet connectivity or reduce it under very stringent conditions. Others of the companies have decided to move in more sophisticated ways and virtualize their entire network and refresh it at 24-hour intervals. So my industry colleagues, and I've had the pleasure to be able to talk to a number over the last few years, have emphasized that successful businesses know how to monetize risk. So I think the purpose of this panel really is to help business and you and the audience understand that the threats are real, they're aggressive, they're continuous, and you ignore that at your peril, at your business peril. But at the same time, there are also intelligent courses of action that every business can undertake. And those courses of action can help mitigate the risks. So I really think that's the deeper purpose of the panel and perhaps at the heart of today's discussion. So thank you very much, folks.
Thanks, Steve. And I look forward to diving deeper into some of those issues in the Q&A. Next up is Jake Olcott. He is Vice President at BitSight Technologies, which is a security ratings company for computer security. Jake managed the cybersecurity consulting practice at Good Harbor prior to joining BitSight. He's also worked for the Senate Commerce Committee and the House Homeland Security Committee, where he was a principal in drafting and negotiations for comprehensive cybersecurity legislation. I got to know Jake when he was actually helping us out with the CSIS Cybersecurity Commission back in 2007, I think. He played a really formative role in sort of coming up with that concept, and he's led a lot of legislative priorities and initiatives on the Hill in this area. So, Jake, over to you.
Thank you, Denise. I think we're obviously not a very creative bunch in cybersecurity, because I believe that it was also Dmitri who coined the term greatest transfer of wealth in history, which if some of you who have been involved in this area, you've heard, thousands and thousands of people also repeat that term. Dmitri, I think, came up with that one as well. So I'm making a note.
Was that before General Alexander recoined it?
Far before that. So I'm issuing a charge to the audience here. We've got to come up with our own terms, and we can't let Dmitri just monopolize this conversation, okay? I'm going to, I want to spend just a few minutes talking about this one particular issue, which Deputy Secretary Raskin talked about, which is sort of the interconnectivity and third-party risk issue as sort of a major threat vector. But I will sandwich, bookend those remarks with first some observations from what we're seeing from a security ratings perspective, and also just kind of touch on the cyber insurance piece for a second. BitSight is, as Denise said, is a security ratings organization. We're rating about 31,000 organizations today in real time. The rating that we produce is very similar to a FICO score, credit score for security, 250 to 900. There are lots of different risk vectors that fall underneath that. And the interesting thing about it is that these ratings are derived from things that we're observing from outside of an organization's network. So it doesn't, we're not on site doing assessments. We're seeing malware, we're seeing botnet infections, we're seeing misconfigurations, things like that. And I say all of that to give you a sense of where the financial sector currently stands in this list of sectors. So we issue sort of a weekly index of how all these different sectors are stacking up, these 31,000 organizations that we're looking at. The financial sector is far and away the highest performing sector in our index. We have them, we're looking at thousands of different financial institutions. The average is a 710. Compare that with, picked out a couple of other sectors, compare that with retail is coming in this week at a 680. Utilities, electric utilities are at a 650. Healthcare this week is at a 630. And the education, unfortunately, higher education is just a mess from a security perspective. And they're falling in on our ratings at a 540. So again, these are ratings that we produce and update daily for all these different organizations that fall within those sectors. But the financial sector has always been the highest performing sector. We can talk about why that is. There are a lot of reasons for that, but just wanted to kind of start by saying that. Let me just spend a couple minutes on this interconnectivity, third-party supply chain issue. So, essentially the problem is, or one issue is that We know from Dmitri, who's told us that, hey, you're getting attacked. There's two types of organizations. So organizations know that this is the case at this point. Fortune 1000, Fortune 2000 organizations know this. They've been spending money buying technology and developing processes and governance programs over recent years to improve their security defenses. And so they're really raising the bar for attackers. Attackers are still getting in, obviously, but they're raising the bar. What has been happening is that the attackers are not only continuing to try to go after those key organizations, but now they're also trying to go in through the back door. And the back door is often through your interconnected business associates, third parties, contractors, subcontractors, lots of different terms for them. But we call this supply chain risk. You can call it business associates, call it whatever you want, but that's the issue that we're talking about. A couple weeks ago, you probably saw this, the Securities and Exchange Commission brought this, along with the law enforcement community, brought this case. 30-plus Eastern European criminals had been engaged in insider trading. Everybody saw this from a few weeks back. So what happened was these guys were trading on insider information. Well, where did they get it? They actually broke into a third-party organization, a PR newswire organization, because that's where the companies had sent their pre-earnings data to. They were, everybody's kind of lined up. We're very excited. We're about to announce our Q3 earnings. Well, they weren't the only ones who had it. These Eastern European criminals were able to break in and trade on that information. So this is one example. Obviously, everybody remembers the Target hack from a couple years ago, where the source of the attack was actually through the HVAC vendor. When we look at OPM, commercial is not the only space that is being attacked this way. When we look at the OPM breach, the OPM's data was actually not being hosted on OPM's network. It was actually being hosted by their third party, the Department of Interior. So we're just seeing, we've outsourced a lot of these functions over the years. We're using, contractors and subcontractors and things like that, which is all perfectly fine and good, except when they're not implementing very good security protections. So that's becoming an issue. We're obviously seeing a lot of response in some of the sectors to improve their vendor risk management approaches. Certainly in the financial sector, there have been a lot of new regulations that have been suggested and passed by the FFIEC. We're also seeing in the defense sector with these new DFARS requirements that have recently come out. In the healthcare sector, HIPAA actually requires organizations to protect not only their own data, but when you're contracting with a third party, you've got to protect that data too. And retail as well. So this is becoming a very big issue as Dmitri and Mark and others are working hard to really improve the security posture of a first-party organization. Now the bad guys are just looking for new ways to get in. The last comment that I just want to make very briefly on insurance and specifically on cyber insurance. Cyber insurance, as the second panel is going to get into, one of the hottest parts of the insurance market today. I believe that is the fastest growing element of the of the insurance market today. Something like between $3 and $4 billion worth of premiums are being written. The insurance underwriters have the same challenge that I was just talking about with this third-party risk management thing that organizations have. And the challenge is this: how do I know how well an organization is doing with respect to cybersecurity when I'm about to underwrite their policy? And to be brief, over the years, as Deputy Secretary Raskin suggested, people have sort of the underwriters have sent out questionnaires. And they've received the questionnaires back, and the questionnaires will say something like, do you have a chief information security officer, yes or no? Do you use antivirus, yes or no? And I mean, of course, everybody has sort of figured out how to fill out a questionnaire at this point. And so, there's an evolution that's happening in cyber insurance underwriting. We're very grateful to be a part of that. BitSight is actually providing our ratings to the major underwriters today: ACE, AIG, Liberty Mutual, CFC. They're all using BitSight ratings to help with the underwriting process. We expect that is going to continue as more underwriters are looking for additional information to help with this underwriting process. There is a role for the government to play here and for regulators to play. And I think a lot of that has to do with providing more information, more data for those underwriters to help them with the on the actuarial side. But I really think that the government can play a big role there. So let me stop and turn it over to Mark.
I think it would be really interesting to see some of the ratings, Jake, in the public or just open source to understand sort of, I think just looking at how government agencies perform on your scale would be really interesting in comparison to some of the companies. Public pressure and reputation might encourage some folks to do a better job there. Next up is Mark Weatherford. He is principal at Chertoff Group, former Deputy Undersecretary for Cybersecurity at the Department of Homeland Security, Chief Security Officer. Prior to that, he was Chief Security Officer at the North American Electric Reliability Corporation. Some of you may be familiar with NERC. They set the standards for the bulk power system. And prior to that, he was Chief Information Security Officer for the state of California, and before that, the state of Colorado. So incredibly experienced managing this issue from all different perspectives. I think I met Mark first time when he was on stage speaking at an event in Seattle, where I was there doing oversight on Stuxnet, and it was about Stuxnet actually, and reverse engineering the code and what is the electric power utility industry community going to do about it. So look forward to your remarks.
Thanks, Denise. Boy, that brought back a bad memory. I'd been at NERC for exactly 7 days when Stuxnet happened, and that consumed my life for the next year almost. I wanted to go back and just for a data point on what Jake talked about with third-party issues, threats. I work with a lot of Fortune 500 clients today doing risk-related work, come in and help them understand what their security program looks like, where they should be devoting resources and things like that. We had a company ask us last year to come in and help them understand what their third-party liabilities were, what their third-party processes looked like. So he said, well, how many contracts do you think you have with third-party organizations? They said, maybe 1,000 or so. Guess what? 8,000. I was telling this story to a friend of mine who's a CISO of a very large manufacturing company, and I told him that, and he goes, I have 80,000. So when you think about the risk that you're inviting into your environment, these are some of the things that CISOs have to worry about. I'd like to say, first, Deputy Secretary Raskin, that was really a good talk she gave this morning, and I counted, there were 13 individual pieces out of there that we could sit in here and talk about all day long. It was a very good talk, and I'm going to talk a little bit about here. So I'm going to talk about the threat from a different way, kind of a painful, self-inflicted perspective that we're doing to ourselves. We as the universal we, the global we, and it's around the Internet of Things. For those of you that aren't familiar with the term, it's kind of become du jour over the last couple of years, but it basically means anything that can be connected will be connected. And if it's connected, it's transmitting data somewhere, somehow, about something. And that can be, we've seen issues in the transportation industry recently with automobiles, with airplanes. Trains are heavily involved in the Internet of Things, transmitting telemetry data from the trains as they're going down the track. So you can find out, if a wheel's wobbling or if there's something wrong when it pulls into the station, they can fix it immediately. Very, very interesting, the things that are going with transportation. Medical devices and healthcare, as Secretary Raskin mentioned, been a number of incidents over the past couple of years where experiments where people have hacked medical devices, insulin pumps, pacemakers, and things like that, simply from a Bluetooth or a wireless connection. Very, very scary stuff. Industrial components and critical infrastructures. This is one of the areas where I've spent some time, especially in the electricity industry. And much of the heavy industries across the world, especially in the United States, the underlying infrastructure, the big iron infrastructure we call it, has been in place for 20, 30, 40 years. What has changed is we're laying all kinds of digital infrastructure to manage those devices on top of it. And those digital infrastructure is very vulnerable, again, to these Wi-Fi and Bluetooth-enabled connections that manage it, much of it. Home appliances. You know, we've heard about the toaster and the refrigerator, et cetera, being connected to the internet. Interesting anecdote. On Sunday, 4 days ago, my water heater went out at my house. I went down to Home Depot Sunday evening at 5:55, just before they closed, and was scanning all of the water heaters there. And I said, okay, this one's $559, this one's $659. And I'm looking at the description, and I cannot figure out what's the difference. So I called one of the guys over, and he says, well, that one's Wi-Fi enabled. But why in the world would I need my water heater Wi-Fi enabled? Again, another entry point into our home, things that we aren't thinking logically, I think, and securely about. So basically what the Internet of Things is if it can be connected, it will be. And it doesn't even have to have an on-off switch, because much of this stuff is always on, and it's always transmitting information. And that's the problem. It's always transmitting information. Where is that data going? Who's getting that data? Who is managing that data? What I see is there's a lot of stuff happening, and we're sharing information about our homes, our cars, ourselves, with people that, quite frankly, we wouldn't share it if we knew we were sharing it. But you know those EULAs, those user agreements that you click through every time you download an application or you buy something new? In that EULA, you have given them, whoever owns that, you've given them the right to do basically whatever they want to do with that device and your data. So the problem is this Internet of Things. We are truly speeding down this road, developing technologies, and there's no guardrails. So there are going to be wrecks that are happening here. So I truly see this as an incredible threat to our society in general. We thought Snowden was bad. I think we're voluntarily providing so much sensitive and personal information, and perhaps even classified information at some point through these Internet of Things technologies. And the reason why, and by the way, people always ask me, why are we doing this? Why don't we stop and develop security and privacy into these products? It's because the economic benefits of this technology are vast. They're literally changing the world. As we sit here today, it's changing the world. And unfortunately, we haven't built the seatbelts into the car yet in this Internet of Things technology. John Chambers, the former CEO of Cisco, he said last year, if we look back a decade from today at the impact of the Internet of Everything, I predict you will see it will be 5 to 10 times more impactful than the Internet has been today. Now, I've been involved in the Internet since its beginning, and, well, almost its beginning. And understanding the impact that that's had on our society and our lives, I can't even imagine something that's 5 to 10 times more impactful than that. So that's one thing. So the Internet of Things, and I could talk about the Internet of Things all day long. I think it's a serious issue that we have not really kind of put the controls in place yet. Second thing, very, very quickly, from a threat perspective, insider threat. Everybody talks about the insider threat. it truly is becoming one of the biggest threats to most companies. And that is the people that we trust the most, the people that we give the credentials and the keys to and the access to are the same ones that are sticking us in the back with it, and either stealing the data or providing access to other people with the data. We have got to get better about managing who has access to what, who has control to what. We are horrible at it. You know, we're still using, it embarrasses me to say this, and we in the security community have failed everybody. Embarrasses me to say this, that we're still using usernames and passwords in 2015, technology that was old in 1995. We've got to get better. This is another self-inflicted wound that we have. Finally, and this may be a little controversial, I think another threat that we have to the technology community is legislation and regulation. Now that's a little bit of an odd take, but last year the President signed 5 pieces of legislation out of the 113th Congress around cybersecurity. This year in the 114th Congress, since January, there are 22 pieces of legislation related to cybersecurity and privacy. It worries me that some of this legislation may not be well thought through, and maybe it will mature as it goes. But it concerns me because legislation becomes very static. But in my world, in the cybersecurity world, it's dynamic. Things I worried about yesterday are not the same things I worry about today. And any kind of law or regulation that pins us down and doesn't give us the flexibility to react appropriately is going to create problems for us. And not just fine problems, legal problems, real no kidding problems to the critical infrastructures, I fear. So I will stop there, and we'll take whatever questions come out of that, Denise.
That is a controversial point to end on, I would say. Yeah, I think legislation can be good and bad. It's hard to craft really good legislation, right? But legislation would be required to get certain types of incentives or to give government agencies some specific authorities to do the things that they want to do or need to do to address the problem. But yes, agree that a static approach doesn't really work in this space. I was wondering if we could go a little bit deeper into some of the comments that you all made on the threat from nation states. So, you know, I've talked to a number of banks who've said that they've recently stood up, threat intelligence centers within their organization to understand geopolitical events and the impact that these geopolitical events that are outside of their control have on their business. Because what they've seen in the past is that cyber activity targeting their companies tend to have some correlation with some of these major geopolitical events. And so there's a desire to acquire more threat intelligence, and I don't mean just regular, information you can collect on the internet, but intelligence that may be classified that only the government can furnish. I'm curious to know from our panelists who've had a lot of experience working with companies and government agencies on both sides, collecting that information, distributing it, and using it. How important is this information? Is it really necessary for large, major, global companies? Maybe your phone got hacked, I don't know.
Sounds like you're lost.
And how can they get their hands on it if they need it? So who wants to take that one?
Well, CrowdStrike, we're actually one of the leading providers of cyber threat intelligence, including to much of the financial sector, as well as government agencies and many other industries. We believe it's absolutely fundamental, particularly now that you're facing attacks from nation states, just like it's critical for countries to have intelligence on potential threats that are out there, whether it's in the physical world or on cyber world. it is absolutely fundamental for companies to have that type of information to have a more predictive strategy. Intelligence is all about looking around the corner and see who's coming. And cyber threats don't emanate out of the ether. There is a human being or set of human beings that are responsible for each and every single one of them. There are different types of adversaries that we've talked about, and you want to understand their motivations, their capabilities, their tradecraft, what it is that they're after, when are they going to come after it, how they're going to use that information. So we're seeing a tremendous growth in the consumption of threat intelligence. And one of the things that companies are starting to realize is that threat intelligence is not exclusive to the government, and in many cases the government doesn't even have the latest threat intelligence because they're not seeing all the threats for various reasons based on authorities and visibility and things like that. So you actually see commercial sector step up and share a lot more information than the government typically shares, including information that the government would consider classified that the commercial sector can produce at an unclassified level because of our own sources and methods of collection.
Did you want to, or Mark?
Well, I can jump into this, but I think I'd stipulate largely what Dmitri said is, so what we see across different business sectors is that different actors focus on different sectors. And so one of the things that Dmitri got at, the government has some pretty awesome collection capabilities, and those capabilities in terms of how they are organized or in a number of places from the law enforcement side, but also in the intelligence community. But one of the things that becomes a constant challenge is how do you take data that you understand from a very highly classified source and you translate that so that companies whose networks by definition are unclassified corporate networks so that they can take indicators of compromise and deploy them at their discretion on their network. And so companies choose to have the different sources for those. They have, of course, firms like Dmitri's and his competitors. And then there are alternatives from for those indicators of compromise, Department of Homeland Security and the NCIC and the companies who choose to participate with the Department of Defense contractors who choose to participate in the programs that the Department of Defense has. But so there is this innate dynamic tension, I guess I would say, between what the government knows and how it knows it and how it takes that and reduces it to what in the intelligence community is often termed a tear line, if you will, where at the top is the deep contextual description of how we know what we know, and at the bottom is this little summary about here's what we could say at the unclassified level. And so one of the things that we do at the DoD Cyber Crime Center is try to look at this content at the top on the classified side, understand it and mix it, the unclass piece of it, with the reporting that we receive from our partners, and that makes for a richer product that the companies, again, at their corporate discretion, can choose to use those indicators or compromise or not. And then, depending, again, on the means of the companies, they have different avenues to further inform them, whether it's BitSight or whether it's CrowdStrike or other alternatives.
So it's interesting because the world has changed with respect to intelligence. 10 years ago, 15 years ago, cybersecurity intelligence was the absolute 100% domain of the federal government. Today, that is upside down. And I think sometimes we hide, and I'm going to disagree with Steve just a little bit here, sometimes we hide behind this classified stamp on the top of a document. I've seen classified intelligence, cyber intelligence, and I've seen private sector cyber intelligence, and the private sector intelligence is every bit as good as the classified intelligence being produced by the government.
I wouldn't disagree with you at all on that. It's a question of, you know, the relationships that private companies have with their clients and what they can source versus what the government has access to and the way it's collected it. But no, I'd stipulate that, absolutely.
So I guess my point, though, is that I think we discussed this sharing of information, and having been on the private sector side of consuming classified information, which was absolutely painful, and been on the government side of trying to give people who needed it classified information, very painful. The movement to synthesize this and share this classified and unclassified information, bring it together, is getting better and better and better. And a little anecdote, another little anecdote. When I worked in the electricity industry, a lot of people don't know that the North American power grid is the North American power grid. It includes Canada and even a little slice of Mexico. And when I was the CISO at NERC, and I needed to share something with a Canadian utility, and if it was classified, I couldn't do it. But if I could step right across the border to New York or another state, and if they had a footprint here, I could share that kind of information. But I guess my point is that sharing that kind of classified information, we didn't, because of the classified sticker on it, we have taken, in many cases, the electricity industry is just one example, but we've taken and created this artificial barrier, this artificial boundary upon which you can't step over, which, you know, if one of those big utilities in Canada goes offline, power goes off somewhere in the United States. But I couldn't share threat and vulnerability information with them just like I could in the United States. That's enough.
Maybe now we could take a few questions from the audience. If you could raise your hand, and I'll have a microphone delivered to you over there in the back. Just please introduce yourself and your organization.
Hi there. I'm Cindy Faith, independent consultant. And I guess one of my big questions is I generally support small to medium-sized companies, mostly the defense contractors. And with all of the information that we've got with regard to information sharing, and that sort of our national strategy for information sharing implies that we've got infrastructure in place in the small and medium-sized businesses that actually can ingest, you know, the real-time NKIC information. So the larger corporations that are under, you know, financial regulations, they certainly have infrastructure in place, but, and one of you guys mentioned the DFARS that are coming out, but they're not here yet. Do you have any kind of thoughts on how to get to that community, Dmitri? And, you know, because I think that that's, you know, clearly our biggest vulnerability, and they're not motivated, and they don't even know how to begin, and nothing's prescriptive. So I throw it out to you.
No, I think that's exactly right. Much of the innovation we have in this country is coming from the small and medium businesses, not from large corporations, and they're often the targets of this activity. And, you know, we've worked with a lot of small and medium businesses, including some of the defense contractors that are working on highly sensitive things for the Department of Defense, but don't have not only CISO, but anyone focused on cybersecurity, because they simply can't afford to do that, right? There may be a shop with 15 people, and, you know, they're all working on this project, and there's no money left for, you know, really focus on security. So one of the things that, you know, we focus a lot on is actually providing a managed hunting capability for those types of organizations, where we will do the work for them to monitor their network, to respond to the attacks on that network, to help them understand and contextualize the threat. What does it mean for them? What do they need to do in response? One of the things I fundamentally believe is that cyber fundamentally is a human problem. There is no silver bullet technology if someone is offering you one. I also have a bridge that I can sell you in Brooklyn. Technology is an important part of the solution, but the key thing is to marry it with people. And ultimately, the successful organizations that I've seen that have been able to prevent a breach from being really a bad year for them to just being a bad couple hours and preventing the exfiltration of data are the ones that have tremendous capabilities and sophistication in their teams, married with a technology that gives them the visibility to detect and thwart an adversary very, very rapidly. And organizations that don't have it have an opportunity to rely on third parties like CrowdStrike and some others to do that for them. But that capability is really, really critical.
can just add to that briefly. I think Dmitri's absolutely right that managed services and cloud-based services are certainly on the rise for a lot of issues, including security. So his comments, I think, are spot on. The other thing I would just add, though, is there are a lot of people who are expecting that security and privacy issues will be important points for industry consolidation. So the defense industry is not the only industry that is focused on this issue, on this third-party and fourth-party, cyber risk supply chain problem. I've worked with some insurance folks in the past that, and for any, there's obviously a lot of insurance folks in the audience today. That there is a very long, supply chain, business associate supply chain in the insurance business as well, through all of the different brokers and retail brokers and things like that. A general counsel of a major insurance company once told me that he expected that there would be major consolidation because they were putting into their contracts that if you wanted to do business with them, you had to meet these certain security requirements, and he didn't think that a lot of them could do it. So he was then turning to some of the larger players to say, hey, if we're using these guys today as well as you, but we want to continue to work with all of you, but you should think about bringing those smaller guys into your fold. So. I think that you're starting to see some of that today, but it's certainly, don't think that it's just the defense, industry. It's also in healthcare. It's also in retail. I mean, it's happening in a lot of other sectors as well.
So one of the things that you get at is really one of the toughest problems today. So, there are very large companies with lots of smart folks and a lot of resources, and they can undertake, have a range of different alternatives they can do. But if you're Bob's Aerospace Fastener and you're Bob and 9 other guys, the department absolutely recognizes, Department of Defense absolutely recognizes that's a really tough issue. And you don't want to create a stack of regulatory stuff that crushes Bob and his ability to compete, right? The big integrators also recognize that, and so they're the guys who are, Bob or competitors of Bob's are competing for the business from the prime, but what you get at and the intersecting complexities of that is a tough issue that a lot of people are thinking through, and I would be the last guy in the room to tell you that there's a really tidy solution set for that. But I think people do recognize the big rocket, the things that we've got to thread in that, and Jake kind of got it. One of the solutions, one of the appeals of cloud servicing is at least the sales pitch, is that we're smart guys who can do all that very attentive, continuous security monitoring and refresh of apps and upgrades and so forth. So. There may be, as part of this solution, a market solution that begins to address that. And again, I think you're spot on. It's not simply a DoD supply chain issue. It's every company that has a succession of vendors that support it in some way. They have the very same issue.
Another question? Up here in the front.
Do I need a microphone?
Yeah. Microphone. Thank you.
Thank you. This is Ted Nickel, Commissioner from Wisconsin, also a member of the NAIC Cybersecurity Task Force. So we're very pleased to be here today, and the information you provided this morning has been just fascinating. And you're right, we could discuss many of these issues that you talked about all day long. The one issue is interesting, Jake. You said that a lot of insurers are using your ratings and they're assigning some sort of value in an underwriting process to the potential risks as a part of the entire underwriting makeup of a particular risk. And it struck me as you've got sort of a 250 to 900 rating, and to a great extent, many businesses, many insurance companies are looking right now for some sort of a safe harbor. And would you suggest, or would anybody suggest, that being above a certain number in your rating system would designate a safe harbor. We as regulators are looking for a way to figure out if an insurer meets a certain standard that they've at least provided themselves a bit of a safe harbor. But I was just wondering, this kind of touches on a lot of the things all of you have said, but what we're looking for, what the insurance industry is looking for, and I'm sure what many businesses are looking for, is a level of comfort to say, all right, we spent this amount of money, we put these kinds of controls in place, we've made it to here, and here is above what is considered good enough, or a bit of a safe harbor, or a bit of a standard to be met.
I really think that this is one of the fundamental questions in cybersecurity. The question is about the standard of care. How do I, as an organization, know that I am, aligned with other folks in my industry? Am I doing better? Am I doing worse? Am I following best practices and that kind of thing? I think this is the exact question. The Federal Trade Commission has obviously been weighing in on this, in recent months and years, and I think maybe the best way of answering it is that, first of all, there is an evolving standard of care when it comes to cybersecurity. There are any number of best practices that one can point to in any number of documents. We have international standards for cybersecurity. We have NIST standards. We have top 20 lists. We have, there's a lot of stuff out there that an organization can align itself to. If you align yourself to any one of those things, ISO 27001, SANS Top 20, NIST 800-53, those are all good practices. I think it's proper for an organization to do something like that, and many organizations do. Once there has been an incident, courts and lawyers go back and they review whether you were meeting the standards that you suggested that you were meeting, or that you did indeed adopt. And I think that those are issues best left to lawyers and judges to resolve and to argue about. Specifically with the use of our ratings, it is very much dependent on the organization who uses our ratings to determine what they mean to them. So if I'm a major financial institution and I'm doing business with a third party that we're rating a 400, I could choose to not do business with that company. I could choose to interact with that company and say, I'm only going to do business with you if you bring yourself up to a 600. I could choose to look at the 400 and say, well, that's not good, but there's nobody else that I can work with, so I've got to work with you. I think that those risk management decisions are usually best left to the individual organizations themselves, and it's very hard to, final thing I'll say, it's very hard to provide a safe harbor based on one particular element, one particular grade, or even a certification to an international standard. Even that doesn't necessarily have a great deal of value if the assessing organization failed to look at 3/4 of the things, and they just kind of checked through it and said, all right, here you go. So this is a really significant challenge that a lot of organizations have, and I don't envy you or your fellow commissioners, but I do think that there are a few things that you could look at to start to put together a package that could help create a standard of care for an organization that would give them the confidence that they were best aligned with your expectations.
If I can just make a quick comment on this concept of good enough. I think one of the dangers we have with standards and best practices, and they're almost universally good, but the problem is that sometimes they evolve into a checklist and a compliance, and I like to say that compliance is a death of security. Security is not about compliance, and the amount of investment you make should be proportional to the risk you face. And for different organizations, that investment is going to be different. And it makes sense in the physical world. We do this all the time. If you're an oil and gas extractive company operating in Alaska, your investment in security, physical security, is going to be different from a company operating in Iraq, right? The same thing is true in cyberspace. What you do, what type of business you're in, what type of competitors you have, what you manufacture is going to dictate what type of security investments you need to make, and that's where intelligence comes in.
I would say the answer is no to the question. I don't think there is, and saying it more bluntly than Jake did. But you made me think of something here, and you know, we in the security business have gotten by for decades with scary bedtime stories. I mean, we say the world is coming or the world is falling, you know, the world's going to end if we don't get $1 million for this new widget or this new device or this new service. And it's worked. I mean, I used to do it. That was the only way I could get resources, was to tell these kind of scary bedtime stories. Again, the world is changing now, I think, and again, because of the very dynamic environment that we live in. You know, when we think about, Heartbleed is a good example. I mean, there were a couple of big events last year. Heartbleed was an example. It was a vulnerability that has existed for a decade, and no one knew about it. And then all of a sudden, one day we knew about it. One day you were secure, the next day almost everybody in the world was vulnerable to Heartbleed. So that changed your risk posture in every company that was susceptible to that. So, I think what we're gonna move, and I've been talking with a number of insurance companies over the past 2 years about this. I think where we're going to get is the insurance industry is going, and I know I'm talking to the insurers, I'm probably, I hope I don't get myself in trouble here. I think where we're going to end up at some point is, somebody mentioned it earlier, continuous monitoring. An insurance company is going to demand real-time visibility into an IT environment to understand what the risk is, because the risk fluctuates on a day-by-day basis. So if you're going to underwrite a company, you're not going to underwrite them once a year, visit the company and say, okay, what's your security posture today? Because that security posture is going to change tomorrow. So, you know, if you underwrite a policy for $20 million, your liability may be $40 million tomorrow. So I think that there's going to be something, and there's a number of companies that are developing technologies today to do this kind of real-time monitoring, and it's very big brotherish, I get that, but if I was an insurer, I don't think that I would, I would trust my underwriter to go out and visit a company once a year and go through this questionnaire and say, okay, great, you're good for the next 12 months. The world changes too quickly in this business.
So what you're kind of beginning to talk about, if I get it correctly, can you conceptualize the network equivalent of let's say on automobiles, seat belts, anti-lock brakes, and features that diminish the likelihood of untoward incidents? You know, in the automotive industry and automotive insurance products, that's fairly well developed with an incredibly deep actuarial basis to think about those things. Can you conceptualize that you could do similar kinds of things in network security? I think the answer is yeah. I think the journey to get there is going to be really interesting in terms of the intersecting interests, in terms of, as Mark just alluded to, how you collect that data in a way that is that doesn't pose a concern for the people that who originate the data, the company. But conceptually, I think there's a way that you could fit this together thoughtfully so that it would give you a much sounder basis to think about the network security practices of a potential insurer and their relative performance compared against that industry, a desirable industry standard.
If I can just, the challenge with that today is that cyber insurance is a specialty line. And underwriters have essentially excluded cyber from all of the other lines that they underwrite. So there's no real requirement to assess cybersecurity when you are underwriting general policies. There's a need to assess cybersecurity when you're underwriting a cybersecurity policy, a specific cyber insurance policy. But today, those policies we all know are very narrowly written. The lines are basically up to $25 or $50 million in most situations. So there are actually market reasons why I agree that folks should do broader assessments and probably care much more about things today than their underwriting process might indicate. But there's a reason why they're not doing it, and it's because of that cyber is a specialty line today.
We have a question up here in the front. If you could just wait one moment for the microphone.
Thank you very much. Oklahoma Insurance Commissioner John Doak, and kind of question for Jake and really for the panel. Dovetailing on Commissioner Nichols' question, his was related to companies. Mine is related to state governments like the Oklahoma Insurance Department and my colleagues, and the reliability of the data that we have in the fabric of state governments and the protection that we have, relative to the financial information which we're transacting. Could you make any comments about that, and will those be part of maybe your standard?
Yes, I mean, there certainly, we rate lots of different organizations, including, state governments and state agencies. Obviously there has been probably fair to say that there's been an underinvestment by states in cybersecurity for their own infrastructure and data. That may be a gross understatement.
As a former CISO of 2 states, yeah, I can say that's pretty accurate.
Yeah. And I will just say, I will actually leave Mark to talk about some of the challenges there, but I will just say that I think it's very smart of the NAIC to not only look at the security of the insurance companies in which you oversee, and not only to look at the cyber insurance underwriting process, which both are very, very important, but I think that taking a very close look, as you are, on the security of your own state agencies is a really positive thing. Mark.
Well, I agree, and I think, unfortunately, there has been a fairly significant underinvestment at the state level. In fact, I just did an interview on Monday on this very issue, and unfortunately, it goes in waves. When a big event happens, all of a sudden everybody gets excited, start asking questions. 2 weeks later, no one's excited about it anymore. And unfortunately, the funding process in most legislatures is at least 12 months, and some years is 2 years, or some states is 2 years. So those funding cycles are very difficult to catch them at the right time, and it really is unfortunate. And in fact, this even occurs at state or in the federal government in some agencies where it just hasn't caught fire yet, it has not. There hasn't been the fundamental changes made organizationally to make this a core piece of the business. And in fact, it has to be. It must be. No organization, private or state or federal, can do business without the internet and the IT connectivity that we need to do business today. Continuing to underfund it, I think, is going to continue to have problems for us. And I don't mean to be too hyperbolic about this, but the OPM event was, I can't even begin to describe how tragic that is. And we just barely beginning to understand the long-term implications of that. But that probably exists in every agency. Some event like that probably exists in every agency, just hasn't been uncovered yet.
If I can just make a quick comment on Mark's last point, I think we're thinking about incidents actually the wrong way. We tend to think of these as discrete events. OPM gets hacked, they clean it up, they send a notice to everyone that they now get free credit monitoring, which is going to really help with the Chinese intelligence services. They're not trying to steal your credit, but perhaps trying to extort some information out of you. But that aside, it's actually not a discrete event. It's actually a continuous state of compromise. So, OPM had an issue last year. The reality is that these actors are persistent. They have a mission to do, and they don't stop just because they got discovered and they got kicked out. They go in the next day. So we tend to discover them maybe in a yearly or 6-month increments, but the reality is that the actors are there on a daily basis.
I think we can take one more question right there. If you could take the microphone. Thank you.
Robert Dowling with Dynetics, and I want to ask you to address the cyber threat from a little bit different perspective, but something that I hear the insurance industry talk quite a bit about, and it's that concern of aggregation of risk and the cyber hurricane. And almost to the point you were just making, we hear about the events once the data that's been compromised starts to be used. My concern is more how much reconnaissance is being done, particularly by nation states that might eventually then launch a cyber hurricane that could have, huge implications to the insurance industry as well as the nation itself.
Well, I think we have good news and bad news. Cyber Pearl Harbor, I think, was first coined, not by me, for a change. That's the only one you didn't know. Yeah, thank God, over 25 years ago, and it still hasn't happened, and I don't think is likely to happen in any near future. The reality is that nation states don't just launch attacks against each other out of, as a hobby, that there's going to be motivation and an interest to do so, and outside capability may be there, but the motivation may not necessarily be. But what we're seeing on the bad side of things is what I would call a preparation of the battlefield type of activity, where we see intrusions into organizations like critical infrastructure, for example, that have really no financial motive, no IP theft type of interest, but are there purely seemingly to collect information that could be useful to actually shut down that system at a later point if the actor chooses to do so. So that type of reconnaissance activity is ongoing and is done by a number of military agencies around the world, just in case that capability will be needed in a wartime type of situation. So that is obviously a concern, and we need to do more to actually monitor these infrastructures. The irony is, as Mark knows really well, is those types of organizations that often present the greatest risk to us in terms of our lifestyle and well-being are also the ones that often invest the least amount of money in this issue and often have the smallest budgets to spend on it.
Just another point on the aggregation of risk, because I think it's a really important point. And I'll go back to my Heartbleed example. This was an event, and again, there have been hundreds of them, but this was an event on one day. All of the companies that were insured by all of the insurance companies around the world, they were fine. And then a day after Heartbleed, this aggregation of risk, now all of a sudden, you were responsible, you were liable for this vulnerability in all the companies that you were insured. That's a big aggregation of risk. And when you think about critical infrastructure sectors that depend on very specific types of technology or very specific types of service, one of those services becomes compromised, one of those devices become compromised, that aggregation of risks is spread across that entire sector or multiple sectors. And again, thinking about this from an insurer's perspective, holy cow, that's a big deal. And I would be afraid of that as an insurer. I would be afraid of that aggregation of risk.
I will also be very quick. I hope maybe the second panel can speak to this specifically, but I know that some underwriters and brokers are offering specific SCADA disruption policies. So SCADA systems are the operational technology systems that control critical infrastructure. Like Homer Simpson at his nuclear plant kind of thing. A SCADA system.
You're stuck on Homer Simpson.
Love
today.
it. Love The Simpsons. When you think of being able to buy a policy like that that would cover you from a SCADA disruption, you think, well, that's that's great. You know, I can purchase that. The lines, as I understand them, that are being offered are very small. I mean, it's a very small, you know, because as you can tell, not a lot of people are wanting to take that risk of underwriting a bunch of SCADA disruption policies and then one day having the entire, you know, grid be knocked offline. So hopefully the second panel can kind of get into that a little bit more, but I think you're starting to see some specialty lines that are getting at some of those, you know, kind of larger incidents, maybe not necessarily the aggregation piece, you know, like cloud infrastructure and stuff like that, but people are definitely trying to approach this critical infrastructure vulnerability situation through insurance.
Stephen, did you have any last words?
To tailgate on Dmitri in your question, so they're called advanced persistent threats for a reason. We know, having looked at these in deep collaboration with industry partners and both in the partnership that I described, but also in conferring with Dmitri and his counterparts and others, that there's a certain sequence of things that we see occur in intrusions, and we've decided to call that the kill chain as a reference. So one of the things you see in an intrusion frequent in the front end step of that is something is a reconnaissance. And so I think that begins to get at what you talked about. I'll defer to Dmitri because he can, part of the problem I have in addressing your question is I'm trying to remember what I read in a top secret document versus what I read in the Washington Post, and that becomes a challenge. So
It's often the same thing.
but it's so I will defer to my esteemed colleague here who gave you a very nice description of that issue. So thank you, Denise.
Thank you. Well, I have to say this has been an extremely enlightening conversation. I think we've covered a lot of great issues and really set the stage for the next panel that will talk about the current sort of cyber insurance environment and how we can better leverage insurance to improve security, measure risk, et cetera. Anyhow, please join me in thanking our panelists. And one quick announcement. So we're going to take a quick break. Feel free to get some refreshments or use the facilities. DHS Undersecretary Suzanne Spalding will be giving a keynote address shortly after 11. So please just be back in about 5 to 7 minutes. Thank you.